now take a look at Biocon Biologics. It's actually been a year since they became a global biosimilar company. Earlier in the day, we did catch up with Shreehas Tambe, who's the MD and CEO of Biocon Biologics. The stock is up 7.5%. Let's hear out what he has to say on the company's growth outlook. We will hear a slice of that conversation.
It's been a great year overall. I would say, stepping back, not just the last quarter which you referred to, which was an amazing way to end the year. We couldn't have had a better way to end the calendar year that we did, with the kind of approvals and the recognition of all the effort that our teams have put in to work with global regulatory agencies and setting us up in a very nice way to get to the next calendar year. So I think the end of the year was good. But having said that, the year itself, Tamanna, has been a very, very eventful year for us.
Tell us why. What do you think has been the biggest challenge, and what has been the biggest achievement in your view?
I think the way I would see it is that these are two coins. These are two sides of the same coin, whether it's the challenge and the opportunity. And we've had quite a few of those at Biocon and Biocon Biologics in particular. The year that went by was another eventful year. It's really transformed us into a truly global, multinational, multicultural, global company, which is amongst the top 5 biosimilars companies now in the world. We used to be known for our innovation, which we continue to be focused on, which is a science and operations company, or development and manufacturing, as they would say, to now having got through the acquisition that we did in November of 22, a very strong commercial engine. So we are now a fully integrated player, one of the top 5, as I said, and in over 120 countries, where through our own self-led teams as well as our partner-led teams, we are in a better position to reach out to more patients and serve them with these high-quality products that we are developing and manufacturing at Biocon Biologics.
Let's talk specifically about the 2 approvals that have come in, one of Yesintek and Yesafili. What are the launch plans? What is the kind of timeline for this? What can you add, Mr. Tambe, in terms of the market size and revenue addition that you expect from these 2?
Yeah, and I must first compliment you for the way you pronounce them, because that's the exact way to call them out. The year is to look forward to the Affili and Integ. These are the 2 products that we will be looking to launch in the coming year, and we have been able to navigate the IP landscape. So you will see us bringing these 2 products, which are focused on debilitating diseases, one in immunology and the other one in ophthalmology. So the Yesintek product launches in the US in February of this year. It also has a global launch plan, because we also will bring it to patients in Europe and other parts of the world in a staggered manner. And we'll also bring Yesafili, which is the ophthalmology product for certain very debilitating conditions for patients where the injection is an intravitreal injection, so it's injected into the eye. And these are products that we are very proud of, and we'll bring those to different countries as we navigate the IP landscape. The first one will be, of course, Malaysia and Turkey, and we'll bring them into Canada shortly. So a lot of interest and a lot of excitement about these products in the months to come.
What are the broad timelines that you can share with us, Mr. Tambe? And I'll reiterate my question on revenue contributions that you're expecting in year 1.
Yeah, as I said, the timeline it starts right away in this financial year for Intech, which is starting in February of 2025, which is in this quarter. So you will see that starting to make a difference right away. And you will see, Affili, which will start probably in the first half of next fiscal year. So that's how we have phased these launches. But in addition to these 2 new launches, Tamanna, there are several other products that we're launching as well. The year that went by saw 60 product launches in different countries for products that we had sold in the US and Europe before, but we launched them in 60 different countries. So It's a very busy time at Biocon Biologics.
Okay.
So that's the first part of the question. The second part was you asked about the revenue contribution. We've refrained from giving specific product, related revenue contributions. But I think what is very, very important to note is how we've grown the business. If you just look at last year, we've had a 58% revenue growth over the previous year and a 64% growth in EBITDA. So it's not just been a sales increase, it's been a very profitable sales increase. That's when you call it growth. A 25% EBITDA margin with that kind of a growth where you're over $1 billion in revenue, I think bodes very well as we get into fiscal 26.
What are the kind of launches that you're looking at in 2025? Mr. Tambe, you talked about 60 launches in 2024. What is that number looking like in 2025? And what are the landmark approvals that you're perhaps watching out for?
Let me just give you a overall sense of what this is. So when we say 60 launches, these are products that you would have got global approval for, and you would bring it to patients across the world. And those would be in different countries. So every country launch is a unique launch because it's an important milestone for that country and patients in that country. So for us, we look at every launch as we bring product to patients in different countries as a very important milestone. So just to get that clear, and we'll have several of those coming up in fiscal 26, which is the year that will come up next quarter. Having said that, let me give you a broader sense as well in terms of new products that we are getting approval for, which were never approved so far. There are 3 new products, 2 of which we've just talked about, and there's another product that we will bring in addition to this. There are 5 new products that we will bring to the US. So if you look at it, in the next 2 years in the US, we have 3 or 4 products today. We will bring another 5. So that will be 9 products in the United States. The 3 products out of the 4 that we've launched, 2 of them are in oncology. Both of those products in oncology have over a fifth of the market, which means it's a very, very sizable share that we have that shows the trust that patients, payers, physicians have shown in Biocon Biologics and the products and the patient reach that we've got. Even our insulin product has a very strong market share, and we've continued to hold on to that. We will be bringing more products to Europe. We already have 8 products, and we'll bring another 3. So you will see us cross that 10 double-digit numbers in Europe as well. And we'll bring these products also to several emerging markets because we've always been a company which has believed in broadening access and bringing products to patients who are really in need of these. And you will see us bringing these products to the 80 countries and emerging markets that we are present in.
Okay. Let's talk a bit about the last 1 year from the perspective of financials, Mr. Tambe. And your EBITDA has improved, has gotten more robust. Revenues perhaps slightly tweaked downwards, but margins looking healthy at about 32% in the second quarter of this financial year. If I were to look at this from an FY perspective, what do you see margins closing in on in this financial year? Are you looking at the 30 to 32% range being margins being protected there?
Yeah, I think this is a very important question. I think it is important to get your viewers to see what kind of a company that we've been over the years, even when our base has changed from being a $200 million in revenues to now being over $1 billion in revenues, which is that $8,000-$10,000 range, and you already in that 10,000 crore range. So you are in a very, very different baseline. But we've always guided to the sense that we would be in the mid-20s in our EBITDA, and we've always performed to that. We've also said that our research pipeline is our lifeline, which has always differentiated us. We are one of the few players globally that has that kind of a strong research pipeline, product pipeline, which continues to be very rich and differentiates us globally. We've continued to invest and guided that we would be that 7 to 9%, given that the base is now increased. So despite that investment and actually to fund that investment, we've grown the business, and we are seeing a very strong EBITDA after investing in R&D in the mid-20s. In the coming fiscal year, we expect these things to continue. We expect a growth as well, given that the current market shares of the product are holding well, and new product launches are slated, right in the beginning of this calendar year. So we should benefit in several geographies from these launches through the year. We will continue to look for profitable growth in the mid-20s on an EBITDA look-forward basis.
And just coming back to the question and the point on margins, is this the range that we expect to be maintained?
Yes, we would be very much focused on that kind of a range, because we believe that growth is important, and it's growth only when it's profitable. And that's been our history. I mean, it's not something that we're talking about today. If you look at us historically, we've always been a company that's been very focused on profitable growth and very conservative when it comes to leveraging our balance sheet. It was only when we did this transformational acquisition that we really had debt. Otherwise, over the years, we've also never had debt on our books.
Yeah, yeah. No, so both things that I want to come to on your R&D pipeline and on your debt. But since you've just spoken about debt, I'll come to you on that. How will the debt refinancing, which you've undertaken in the last calendar year, help you with business growth? And if you can add what the finance costs will be for this newly added debt, what are you penciling in?
I think very important for your viewers to look at this in the right context. We've, as I said, we've been a very conservative company financially over the years. We've never really leveraged our balance sheet ever to do this. We've always been cash positive. Given that this was a transformational opportunity, we just talked about it at the beginning of the show, where we moved from being a two-country company to being present in over 120 countries. The kind of growth that we've seen amongst the top 5 players. When we did that acquisition, we had a debt of $1.2 billion for the first time when we actually did that kind of a transformation. Now, having done that, we wanted to make sure that we had a strategy which first consolidated the business, or preserved value in the acquisition, then consolidated the business, and then accelerate. Now, we've completed the first year anniversary as we talk today. We are celebrating the 1-year anniversary of having completed the acquisition and run it as Biocon Biologics. So it's a very important year for us that went by, and we're very proud of what we've done over the course of the year, several milestones that we just talked about. So that preserved part of it, we're very comfortable. We've been able to retain the confidence of our customers. The current year that we are in is the consolidate phase. And one of that consolidation was what you asked, was fiscal consolidation. How do you make sure that we are able to focus on growth on the business rather than focusing on the debt and the repayment of the debt? So one of the things we did was we came up with a bond issuance, which is now listed on the Singapore Stock Exchange to the extent of $800 million. And we're very proud to see that there's been a lot of investor interest in the Biocon Biologics story. The bond issuance was oversubscribed threefold, and we couldn't issue enough bonds to everyone who had asked and subscribed for it. So we're very happy to see that kind of interest. It bodes well for the equity listing, which we have said we will do at the right time. And it has allowed us to then now focus on the business, because it gives us 5 years to then look at the debt in a different way. And the cost that you asked in terms of how we've refinanced it is not higher than what it was for the syndicated bank loan. And that's why we feel that what we've been able to achieve is a good 5-year moratorium. And apart from that, we've not increased the interest repayment costs. So that's been a big win. And most importantly, it shows that the street's very comforted and confident in the Biocon Biologics story. That helps us as we go towards the unlocking of value that we've talked about in the past.
And when will that be, Mr. Tambe? Calendar year 2025, first half, second half. What is on that horizon, and I think that's the big one really for unlocking shareholder wealth this year.
Absolutely, and I think these questions are very valid, and you've probably asked these of me in the past as well. I've in the past as well said that we are first focused on making sure that we put the building blocks in place. We wanted to make sure that the financing was taken care of, so we were not strapped on the debt repayment side. I think we're very comfortable there. We were also very focused on making sure that business continuity was taken care of. Now that's also showing the right trend with over 20-25% in most major markets in terms of our market share. So that tells you about customer confidence. And the third important thing that we wanted to check was the US FDA approvals that would enable and unlock opportunities for the new products that we just talked about in new markets. And I would say we've been able to check all these boxes. And as we move past these key must-haves, I would say, we can start discussing, what's the right time to look at this unlocking of value.
Have you initiated the regulatory process, or that hasn't started yet?
Not yet. We will of course keep you informed on those developments as and when they happen.
Okay.
But
okay.
keep tuned to how that's developing.
All right, we'll hope to hear from you first when that does happen. Let me come to your R&D pipeline, because that's an important component of this. Give us a picture of what is the R&D pipeline right now looking like? Any timelines on that you can share? And what is the R&D spend? Are you going to keep it in the range that you've mentioned? Are you looking at a scale up?
Yeah, and R&D, as I said, is a very important part of our business itself. We wouldn't call R&D as spend. We've always called it as investment. That's what's differentiated us. That's what kept us ahead of the curve. And that is what we believe will be a key differentiator even as we go forward. We have a very robust research pipeline. We have over 20 products, either commercial or under development or closer to approval. We talked about some of these products getting to market in the next 2 years or less. So 5 products in the US is a great, exciting opportunity for our commercial teams. 3 new products in the next 10-12 months in other geographies. And we're looking to be focused on diabetes, oncology, immunology. And now we're bringing a new therapy area, a product there, which we talked about yesterday, in the ophthalmology space. So we haven't spread ourselves too thin, and we aren't looking to be in a mass play. So we're focused on debilitating diseases, and the investments that you asked me about, we are in that 7 to 9% of our revenues. Given that our revenue base continues to grow, I think we've got sufficient headroom to invest in the rich portfolio of products that we are developing, and we'll continue to bring them to patients across the world. Some we will develop in-house, and given the strong commercial presence that we have in several countries, we'll be open to bringing products in as well, given that we have a large and a strong commercial presence in many countries now.
You talked about the US opportunity, and in that context, wanted to just understand that the recent VAI classification in the Bangalore facility, how does that open up more US potential for you?
Let me just step back a little bit, Tamanna, on this to give you a sense that we've had an exceptional track record with global regulatory agencies. So we've been very proud of our track record with the European regulators, with the Japanese regulators, or even regulators in emerging markets, whether it was the Anvisa in Brazil or COFEPRIS in Mexico, the Indian regulators. We've had a exceptional, stellar record all along. Given that we've went past the pandemic, I think we've had a delay in approvals from the US FDA, both in India and in Malaysia. This was something that was important for us to address. We needed to work closely with the agency to demonstrate the kind of quality systems we have, the kind of products we make, the kind of the competence and the people we have. And that's what we've done over the course of the last few years. And what you just asked me is this was an important milestone for us because any regulatory inspection is not just about that product. It opens up the opportunity because it indicates the confidence of regulators of that country to show that here is a supplier, here is a partner that can give and make these products, life-saving products, in a very reliable manner. And that's what we really wanted to partner with all these key regulators globally. And we're very proud that our teams have been able to successfully demonstrate that. We continue to work with them because we still have to work on Malaysia. We
Yeah,
will
I was
also
actually just going
have
to come to you on the Malaysia update because Bangalore in the clear. Is there anything that we can add in terms of what's happening with Malaysia? I know the CAPA has been filed, but since then?
See, these are all ongoing process. I know you are kind to say that Bangalore's is done, and Bangalore is done for today, and it's an ongoing, continuous process. So we stay focused even in India and even in Bangalore on our plans, and in Malaysia we work with the agency, and we're looking forward to hearing from them on the response to the actions that we've proposed. And we're hoping that they will see a merit in what we have said. We are confident in what we have proposed, and we believe the agency would be convinced with how we've approached this.